Mr. Speaker, sir, I'm informed by the Financial Services Commission that it has taken note of the contents of the report published by Hindenburg Research in January 2023, as well as other information pertaining to this matter, wherein a specific reference has been made to inter alia creation of offshore shell companies in Mauritius, the UAE, and the Caribbean islands. Mr. Speaker, sir, at the outset, I wish to inform the House that the allegations of the presence of shell companies in Mauritius are false and baseless. According to the law, shell companies are not allowed in Mauritius. All global business companies licensed by the Financial Services Commission have to meet substance requirements on an ongoing basis as per Section 21 of the Financial Services Act and are being strictly monitored by the Commission. In fact, in order to meet the substance requirements, all global business companies have to first carry out their core income generating activities in or from Mauritius as required under the Income Tax Act. Second, be managed and controlled from Mauritius. Third, be administered by a management company. Fourth, have at least 2 directors resident in Mauritius of sufficient caliber to exercise independence of mind and judgment. Fifth, maintain at all times their principal bank account in Mauritius. Sixth, keep and maintain at all times their accounting records at their registered office in Mauritius. 7, prepare their statutory financial statements and cause those financial statements to be audited in Mauritius. And 8, provide for meetings of directors to include at least 2 directors from Mauritius. Mr. Speaker, sir, secondly, with respect to the allegation of Mauritius being a tax haven, I wish to inform the House that Mauritius strictly complies with the international best practices and has been rated as compliant with the Organization for Economic Cooperation and Development, OECD, standards. Additionally, since 2018, Mauritius has reformed its global business framework and tax regime with a view to removing harmful tax practices. As per the peer review conducted by the OECD Forum on Harmful Tax Practices, the OECD is satisfied that Mauritius does not have any harmful features in its tax regimes, thus recognizing Mauritius as a well-regulated, transparent, and compliant jurisdiction. Mr. Speaker, sir, to address the question of the Honourable Member of Parliament, I wish to inform the House that the Financial Services Commission is bound by duties of confidentiality by virtue of sections 83.1, 83.4, and 83.5 of the Financial Services Act, and as such, no further details can be disclosed, and the Financial Services Commission can neither deny nor confirm whether an investigation has been and/or is being conducted. As such, disclosure of information on global business companies would be in breach of Section 83 of the Financial Services Act and may have adverse impact on the repute of our jurisdiction. Mr. Speaker, sir, I'm further informed by the Financial Services Commission that this matter is being monitored closely. The Commission is pursuing its actions within the ambit of the relevant legislations and in line with its current supervisory process. It has been carrying out reviews of all the companies cited in the Hindenburg report, and as part of the supervisory review, the Financial Services Commission has requested and received compliance reports pertaining to all the relevant companies which show compliance with varying legislations in Mauritius. Given the multi-layering of those companies cited in the report, the Financial Services Commission continues to monitor the matter diligently. Mr. Speaker, sir, the Financial Services Commission is collaborating with law enforcement agencies in Mauritius and overseas regulators on this matter. To conclude, I wish to draw the attention of the Honourable Member of the Parliament to the fact that the Hindenburg report cannot be read in isolation, particularly in the light of the rebuttal report from the Adani Group.